The year was 2009. The world was reeling from a financial crisis. Distrust in centralized systems was at an all-time high, and from the ashes, Bitcoin emerged. Conceived by the pseudonymous Satoshi Nakamoto, Bitcoin promised a decentralized, transparent, and secure form of digital money. Since its inception, Bitcoin has exhibited a recurring pattern of boom and bust cycles. These cycles are characterized by periods of rapid price appreciation, followed by sharp corrections. This cyclical behavior can be attributed to Bitcoin halving events, market sentiment, and regulatory developments. Each halving event reduces the rate at which new Bitcoins are created, potentially leading to scarcity and price appreciation. The first cycle saw Bitcoin rise from obscurity to a peak of around $1,200. This was followed by a significant correction, a pattern that would repeat itself in subsequent cycles. The 2013 to 2017 cycle peaked at nearly $20,000, only to be followed by another sharp correction. These cycles, while volatile, have become a defining characteristic of Bitcoin's price history. Understanding these cycles is crucial for anyone seeking to navigate the world of Bitcoin. They provide insights into the forces driving its price fluctuations and offer a glimpse into its potential future trajectory. While past performance is not indicative of future results, the cyclical nature of Bitcoin is undeniable and warrants careful consideration.
As Bitcoin enters its teenage years, a new narrative is taking hold, the supercycle. This theory posits that Bitcoin is on the cusp of a prolonged bull run, potentially spanning several traditional four-year cycles. Proponents of this idea point to several factors converging to create this perfect storm of bullish sentiment. One key driver is the increasing institutional adoption of Bitcoin. Once relegated to the fringes of finance, Bitcoin has gained legitimacy as major institutions, including Tesla, MicroStrategy, and Square, have added it to their balance sheets. This influx of institutional capital provides a significant tailwind to Bitcoin's price. Furthermore, the global macroeconomic landscape is becoming increasingly conducive to Bitcoin's growth. Unprecedented levels of monetary and fiscal stimulus, coupled with rising inflation, have led many investors to seek alternative assets like Bitcoin as a hedge against economic uncertainty. The supercycle theory suggests that these factors will combine to create a sustained period of price appreciation, far exceeding the gains seen in previous cycles. Instead of a sharp peak and correction, Bitcoin's price is expected to rise steadily, potentially reaching new all-time highs that dwarf previous records. While the supercycle theory is compelling, it is essential to approach it with a healthy dose of skepticism. Bitcoin's history is replete with unexpected twists and turns, and predicting its future price movements with certainty is a fool's errand.
Looking further ahead, the year 2030 appears as a distant horizon in the world of Bitcoin. While predicting the intricacies of its price action over such a time frame is a highly speculative endeavor, we can explore potential scenarios based on historical trends and emerging factors. One school of thought suggests that Bitcoin's journey to 2030 will be characterized by sustained, albeit potentially uneven, growth. This perspective finds its roots in the belief that Bitcoin's underlying fundamentals remain strong. As awareness and adoption continue to spread globally, demand for Bitcoin is expected to rise, potentially outpacing its fixed supply and leading to price appreciation. Additionally, ongoing technological developments, such as the Lightning Network, are poised to enhance Bitcoin's utility and scalability, further bolstering its value proposition. However, a counter-narrative suggests that the path to 2030 may not be without its bumps. Some analysts anticipate periods of price consolidation or even temporary corrections as Bitcoin's market matures and faces regulatory hurdles. These periods of relative stability, while potentially testing the patience of investors, could serve as necessary breathing spaces, allowing the underlying infrastructure and ecosystem to strengthen further. Navigating these potential scenarios requires a balanced approach, acknowledging both the immense potential and inherent volatility of Bitcoin. A long-term perspective, coupled with a deep understanding of the technology and its underlying principles, will be crucial for investors seeking to capitalize on Bitcoin's journey to 2030.
Section 4, Decoding Plan B, Bitcoin's stock-to-flow model. Amidst the myriad of attempts to decipher Bitcoin's price movements, one model has garnered significant attention, the stock-to-flow S2F model, popularized by the pseudonymous analyst Plan B. This model draws a compelling analogy between Bitcoin and scarce assets like gold and silver, suggesting that Bitcoin's scarcity, driven by its fixed supply and halving events, is a key driver of its value. The S2F model essentially measures the ratio of an asset's existing stock to its annual production or flow. Assets with a high S2F ratio, such as gold, are considered scarcer and therefore potentially more valuable. Bitcoin, with its predetermined supply cap of 21 million coins and halving events that reduce the rate of new Bitcoin creation, exhibits an increasing S2F ratio over time. Plan B's model extrapolates Bitcoin's price based on its projected S2F ratio, suggesting a strong correlation between the two. The model gained notoriety for its accuracy in predicting Bitcoin's price movements in previous cycles, further fueling the belief that Bitcoin's scarcity will continue to drive its value upward. However, it is crucial to acknowledge that no model can perfectly predict the complexities of Bitcoin's price action. Critics argue that the S2F model oversimplifies the equation, neglecting other crucial factors such as market sentiment, regulatory developments, and technological advancements. Section 5, the Golden Cross. Can Bitcoin outshine the age-old asset? For centuries, gold has reigned supreme as the ultimate store of value, a safe haven asset sought after in times of economic uncertainty. However, Bitcoin, with its digital scarcity, decentralization, and borderless nature, has emerged as a potential challenger to gold's throne. This rivalry has sparked a debate. Can Bitcoin, the digital gold, surpass the market capitalization of its physical counterpart? Proponents of Bitcoin argue that its unique characteristics make it a superior store of value in the digital age. Its fixed supply, enshrined in its underlying code, shields it from inflationary pressures that plague fiat currencies. Its decentralized nature makes it resistant to censorship and government interference, while its digital form allows for easy storage and transfer across borders. Moreover, Bitcoin's market capitalization, currently a fraction of gold's, leaves significant room for growth. If Bitcoin were to capture even a small portion of gold's market share, its price would skyrocket. This potential for outsized returns, coupled with its perceived advantages as a store of value, has fueled the belief that Bitcoin could one day surpass gold in market capitalization. However, gold is a formidable opponent, deeply entrenched in the global financial system and backed by centuries of tradition. Its physical nature and established infrastructure provide a sense of security and familiarity that Bitcoin, despite its technological prowess, is yet to fully replicate.
Section 6. Echoes of Adoption, from the Internet to Bitcoin. The early days of the Internet were marked by skepticism and uncertainty. Many struggled to grasp its transformative potential, dismissing it as a passing fad. Fast forward to today, and the Internet has become an indispensable part of our lives, revolutionizing communication, commerce, and countless other aspects of society. Bitcoin's journey, while still in its early stages, echoes the Internet's adoption curve, albeit at a potentially accelerated pace. Just as the Internet faced initial resistance before gaining widespread acceptance, Bitcoin is navigating a similar path. Early adopters, drawn to its technological innovation and disruptive potential, are paving the way for broader adoption. As awareness grows and Bitcoin's use cases expand beyond speculation, more individuals and institutions are likely to embrace it. The adoption of mobile phones offers another compelling parallel. Initially seen as a luxury item, mobile phones quickly became ubiquitous, transforming communication and connectivity. Bitcoin, with its ability to facilitate secure and efficient transactions, has the potential to follow a similar trajectory, becoming an integral part of the global financial system. However, it is crucial to acknowledge that Bitcoin's adoption is not without its challenges. Regulatory hurdles, security concerns, and volatility remain significant obstacles to overcome. Nevertheless, the echoes of the Internet and mobile phone adoption curves provide a glimmer of hope, suggesting that Bitcoin's transformative potential could unfold in the years to come.
Basta. Section 7. Navigating the uncharted waters of Bitcoin's future. As we peer into the future of Bitcoin, one thing is certain. The journey ahead is fraught with uncertainty. Predicting the intricacies of its price movements, technological advancements, and regulatory landscape with absolute certainty is an impossible task. However, by embracing this uncertainty and acknowledging the multitude of factors at play, we can begin to navigate the uncharted waters of Bitcoin's future. Despite the inherent volatility and risks associated with Bitcoin, its potential impact on the global financial system is undeniable. Its decentralized nature, fixed supply, and borderless transactions challenge the very foundations of traditional finance, offering a glimpse into a future where financial power is more equitably distributed. The journey ahead will likely be marked by both triumphs and setbacks, periods of euphoria and moments of despair. Navigating these fluctuations will require a combination of technical understanding, risk management, and a healthy dose of patience. Those who embrace the uncertainty, remain adaptable, and stay true to the underlying principles of Bitcoin are best positioned to navigate its future successfully. The future of Bitcoin is a story yet to be written, an open-ended equation with countless variables. While predicting the outcome with certainty is impossible, one thing is clear. Bitcoin has sparked a revolution, challenging the status quo and igniting a global conversation about the future of money. The journey ahead promises to be exhilarating, transformative, and ultimately, history-defining.